While the world's attention was elsewhere, focused on headlines about political drama and economic uncertainty, a quiet but monumental shift was underway in global trade, unfolding far from the spotlight. Canada and China, after years of icy relations and diplomatic standoffs, have discreetly reopened a $240 billion trade corridor, one of the largest in the world. This isn't just another trade deal, it's a powerful signal that the old rules of global power are being rewritten and that new alliances are quietly taking shape. Political disputes, high-profile arrests, and relentless U.S. pressure once kept these two economic partners apart. But now, economic necessity and the realities of a changing world are bringing them back together. The reopening marks a dramatic reversal from a period of arrests, accusations, and damaging trade bans that left both sides reeling. Canadian farmers lost access to huge markets, watching their grain pile up and their profits dwindle as trade routes slammed shut. Meanwhile, Chinese firms faced new barriers in North America, with investments frozen and supply chains disrupted, threatening jobs and growth. Now, both sides are moving forward with quiet, pragmatic steps, driven by mutual benefit and a shared need for stability in a world of supply chain chaos and uncertainty. This deal challenges the idea that one superpower can dictate global trade policy, showing that the world's economic landscape is more complex and interconnected than ever. The US tried to isolate China with tariffs and pressure, hoping to reshape the global order. But the world kept moving, and new partnerships quietly emerged. Canada, after feeling the economic pain and seeing its industries suffer, realized it needed to chart its own course, independent of outside influence. The restored corridor is a lesson in modern geopolitics. National interests often outweigh alliances, and countries will adapt to protect their economies. It exposes the limits of economic warfare and highlights the resilience and adaptability of global trade networks, which find ways to survive and thrive even under pressure. While Washington built economic walls, others found new doors, forging connections that bypass old barriers and create fresh opportunities. The Canada-China corridor is one of the most significant of those doors, a vital artery in the flow of goods, resources, and influence. Its reopening will ripple across the globe, forcing policymakers everywhere to rethink their approach to trade and diplomacy, and reminding us that in the world of global commerce, quiet deals can have the loudest impact. The Canada-China relationship didn't erode slowly, it collapsed overnight. A high-profile arrest triggered a diplomatic and economic crisis. China retaliated by blocking key Canadian exports like canola, devastating farming communities. Billions in revenue vanished, and the message was clear: political actions have economic consequences. Canadian pork and beef faced similar barriers, creating uncertainty for producers. Meanwhile, Chinese tech firms like Huawei were shut out of Canada's 5G network under US pressure. Tourism and academic exchanges dwindled, and business leaders hesitated to invest. The economic losses were immense, but the damage to trust was even greater. Years of cooperation crumbled, replaced by mistrust and missed opportunities. The dispute disrupted global supply chains and forced companies to rethink strategies. Trade became a weapon in a broader struggle for influence. The pain was felt daily, from Saskatchewan farmers to Shenzhen tech workers. This period was a stark reminder of how deeply interconnected and fragile the global economy has become. The $240 billion trade corridor is more than just a number. It's a vital economic lifeline that links two of the world's largest economies. This corridor represents decades of partnership, innovation, and mutual benefit, shaping the way goods, services, and investments flow between Canada and China. It connects Canadian resources and expertise to China's vast and ever-growing markets, creating opportunities for businesses and communities on both sides of the Pacific. Canada supplies a diverse range of agricultural products like canola, wheat, and soybeans, as well as lumber, minerals, and energy resources. These exports are the backbone of many rural Canadian communities, supporting thousands of jobs and local economies. In return, China provides Canada with affordable manufactured goods, from electronics and appliances to clothing and everyday essentials, making life more affordable for Canadian families. This two-way flow of goods and services helps keep inflation in check, supports jobs in both countries, and strengthens the economic ties that bind them together. Chinese investment in Canadian energy, mining, and infrastructure projects helps drive innovation, create new opportunities, and fuel economic growth across Canada. For Canada, China is a crucial market for diversification, reducing reliance on the US and opening doors to new global partnerships and possibilities. For Canadian producers, access to China's massive consumer base is essential for long-term stability, growth, and the ability to compete on the world stage. For China, Canada is a reliable and trusted source of high-quality food, natural resources, and raw materials, helping to meet the needs of its growing population. Canadian products are seen as safe, premium, and trustworthy by Chinese consumers, boosting demand and building Canada's reputation abroad. The corridor also enables Chinese firms to expand into North America, fostering innovation, investment, and cultural exchange. It's a relationship built on complementarity. Each country has what the other needs, creating a powerful synergy that benefits both sides. That's why the Canada-China trade corridor is so vital to both economies, supporting prosperity, stability, and growth for millions of people. Its reopening is a powerful incentive for renewed cooperation, fresh opportunities, and a brighter future for both nations. The Canada-China trade freeze was driven by geopolitics, not just economics. It began with Canada's arrest of Huawei's Meng Wanzhou at the US's request. China responded by detaining 2 Canadians, escalating the conflict to the highest levels. Trade bans on canola and meat were political signals, not just commercial decisions. Canada was squeezed between US expectations and its own economic interests. Business lobbies pushed for a diplomatic solution, while the US demanded a hard line. The crisis exposed the fragility of global supply chains. Companies scrambled to adapt, delaying investments and seeking new suppliers. The episode showed how quickly politics can upend stable economic ties. Geopolitics, not just markets, now shapes the world economy. Why reset now? Economic realism and global changes left both sides with little choice. The pandemic and supply chain chaos made cutting off a major trade partner look self-destructive. Canada realized no other market could replace China's demand for its exports. Farmers and business leaders pushed for a pragmatic approach. For China, stabilizing ties with a US ally counters the decoupling narrative and secures vital resources. The political standoff over detained individuals was resolved, opening space for economic reset. Both sides had made their points. Now it was time to move forward. The reset isn't about forgetting the past, but about finding a practical way to manage disagreements. Mutual interests demanded a new approach. The old strategy had reached a dead end. The future requires pragmatism over posturing. The reopening wasn't flashy. It was quiet, careful, and methodical. It started with technical talks between agricultural and trade officials to resolve specific bans. Gradually, China allowed select Canadian exports, testing the waters before expanding trade. Restrictions were lifted quietly, avoiding public controversy. Behind the scenes, diplomats met to set new rules for managing future disputes. The goal: insulate trade from political flare-ups and create a stable framework. Business delegations resumed visits, rebuilding trust and exploring new opportunities. Chinese firms cautiously returned to Canada as well. This commercial diplomacy signaled readiness to restart economic engines. The process was a masterclass in patient, quiet diplomacy. Trust was rebuilt step by step, not with grand gestures, but with steady progress. The Canada-China reset is also a verdict on the failure of Trump's tariff strategy. Tariffs aim to force jobs back to the US and change China's model, but the global economy adapted. Instead of reshoring, companies shifted supply chains to other low-cost countries. China focused on higher-value components, while American consumers paid more. US farmers lost access to China, and other countries filled the gap. The tariffs hurt American producers and didn't bring jobs home. China accelerated its push for self-sufficiency and built new trade ties. US allies, like Canada, refused to sacrifice their own interests indefinitely. The tariff war showed that brute economic force is a blunt tool in a complex world. Global markets proved resilient, finding ways around barriers. The strategy underestimated both China's adaptability and the interconnectedness of global trade. In the end, the economic war inflicted more pain than progress. The Canada-China reset presents a significant new challenge for the United States, one that goes beyond simple diplomatic maneuvering. It signals a shift in the global landscape, where even the closest allies are willing to chart their own course when it comes to major economic powers like China. Washington long assumed that its allies would naturally align with its China strategy, but Canada's recent move demonstrates that this alignment is no longer a given. The US must now contend with a world where its influence is not absolute, and where partners may act independently to protect their own interests. Increasingly, allies are willing to prioritize their own economic interests, even if it means diverging from the US position. This trend could reshape alliances and force the US to reconsider how it engages with both friends and rivals. The situation exposes the limits of American influence in a rapidly changing world, where economic realities often outweigh political loyalties. Despite being Canada's top trading partner, the US couldn't prevent Ottawa from rebuilding ties with Beijing. This underscores how even strong economic relationships can't always dictate a partner's foreign policy choices. Looking ahead, future US strategies will need to offer real, tangible economic benefits to allies, not just demands for solidarity or loyalty. The era of expecting automatic support is fading. The reset could also mean renewed competition for U.S. exporters, especially as Canada regains access to the vast Chinese market. American businesses may find themselves fighting harder to maintain their foothold. American farmers, who stepped in to fill the gap during the Canada-China dispute, may now lose valuable market share as Canadian products return to Chinese shelves. This could have ripple effects across the U.S. agricultural sector. The episode highlights just how fluid and interconnected global trade has become. Actions by one country can quickly impact the fortunes of another, making adaptability more important than ever. The U.S. may need to rethink its approach to global trade, possibly even considering rejoining international trade agreements to strengthen its position and rebuild trust with allies. Leadership in global trade now requires not just pressure, but genuine participation, vision, and the ability to build consensus among diverse partners. The Canadian move is a wake-up call for Washington. U.S. allies won't always fall in line, especially when their own economic futures are at stake. In this new era, American influence must be earned through cooperation, respect, and mutual benefit, not simply assumed as a matter of course. The Canada-China corridor is a symbol of the shifting tides in global commerce. The world is moving from superpower dominance to a more multipolar, pragmatic system. Economic health now depends on diverse partnerships and realistic management of rivalries. When faced with tariffs, global trade didn't break, it adapted. The Canada-China reset shows the power of mutual economic interest to overcome political hostility. Influence is earned through leadership and vision, not walls and penalties. Middle powers are asserting their own paths in foreign policy. The reopening of this corridor signals a future where flexibility and cooperation are key. The quiet thaw is a sign of a more complex, interconnected global economy, one no nation can control alone.